Welcome, swing traders. Today we're going to analyze John Deere, ticker symbol DE. John Deere manufactures and distributes farming and construction equipment worldwide. Its earnings are not forecasted to grow very much over the next year, and that's due to inflation and the recession. I'll explain more. I like this company, and if you're a beginner, it's a great company to trade. Very stable. Has nice stable swings. Also in this video, I'm going to show you a great way to turn $243, that's your risk, and make $310, which is a 21%, nearly 22% profit. And this is based on an expected move. I expect this stock to move downward 12%. And if you stick with me, I'm going to show you a option trade where you can capitalize on this expected move. If you're a beginner, you can always just buy or short the stock. However, this is an expensive stock. It's trading at about $391. So if you had $1,000 to invest, you could probably buy 3 shares. Now, an expected move of 12% is no prediction. Nobody can predict the market. This is why it's important to come up with your own strategy and do your own due diligence. The Stock Planner channel is an education channel. We're sharing our ideas. What I'm doing is I'm showing you what I'm doing and planning on doing. And I don't always do it, try to, but it's important for you to do your own due diligence and don't follow these trades. Nobody can win by following somebody else's system. You have to develop your own. This is not financial advice. I'm not your advisor. You must take responsibility for your trades, but if you do, you'll win. Let's get started. We're looking at FinViz. It's a free charting and scanner application. And I like it because it puts these nice little lines in there automatically. And you can see this a upward moving channel. And currently, the price is to the upper end of the channel. And you can see today, there's a red candle. That bodes well for my short. Now, I started this video earlier this morning. And I live on a farm. And I had to prime my water pump because we had an electrical failure last night. Coming back, I placed a short option trade and got in. I hope you stay with me, and I'll tell you more about that trade. But I went short around 11 o'clock. That's 11 a.m. Eastern time. Anyway, you can see this is optional, and it has an analyst recommendation of a buy right there. And the target is $399 or $400, and that's way up here. Oh, not way up, right there, top of the channel. So I think we're due for a reversal based on just charts. Technical analysis, no recent upgrades, and I don't see anything jumping out about the news. Looking at Simply Wall Street and doing some fundamental analysis. Now, we're not through with technical analysis yet. Fundamental analysis. We see that the PE ratio is below the industry standard. That means it's a bargain. Earnings expected to grow. Well, that's good, but this is not a large amount. And when you compare it to the years past of 13%, 14%, this is very minimal. Not going to grow much over the next year or two. I believe that. When this is a snowflake and you want to find one that's big and green, this is not green, but it's a solid company. Nothing wrong with the fundamentals. And they're the competitors, and some of those are a little more greener. Caterpillar is. But you see it's not as growing as well. Let's take a look at a chart. Looking at another free tool called Option AI, and we want to look at 3 months out. 1 month, 2 months, 3 months. They're saying the expected move is about 11.3, and I rounded it off to 12. And you can set this at 3 months. I never do. I just go right down to the table, and you can see the change that occurs as time goes on. 12%. Putting that into a spreadsheet. 12%. The current price is $392. And this was this morning, okay, so it's changed a bit. It's $395. The expected move, if I bought it, then I wanted to go up, of course, would be $438, up in here somewhere. $438. And if it went down, $346, somewhere in there, $346. And this is, of course, a expected move. It goes 12% either way. So the job of a swing trader is just to say, hey, look, is it going up or is it going down? And a swing trader will use some indicators. This is the MACD. And what I say is if it's above the zero line, which it is, that's the time I start looking for shorts, because I'm going to try to predict reversals. Reversals, and not the trend. It looks like this thing is trending pretty well, according to the MACD, and it has. The stochastic RSI is in the overbought condition, and that means it's above the 80, and it's about to come around. It hasn't yet. As soon as we start seeing a little red, it will. And the RSI is in the overbought condition and hasn't come around, but when it does, and drops below the 70, that's when we take a trade. Now, I'm jumping the gun, because I think we're about to see a reversal in the market. We've had 3 or 4 good days, but there's no reason why. The economy hasn't suddenly changed. Ukraine hasn't improved the situation there. Our supply issues haven't improved. Our political issues haven't improved. There's some antsiness with China, and we got recession and inflation. Nothing's changed. So we would like to see if we could find something that would stay below this line for the next 3 months, because I think it hit its top. Here's a summary from a Seeking Alpha article, and it says that farming households are John Deere's primary audience, and they're the ones that buy the tractors and farm equipment. With inflation and a recession, there's going to be an effort to lower food costs, while inflation is going to price the things that the farmer has to buy up. This is not a good mixture for a farmer, and they're not going to invest a lot, according to simply a Seeking Alpha article. Even though John Deere is a very strong company, I love it. I love the way it trades. It's predictable. It's going to have some challenges, and I think it's going to swing down. Remember, with a 12% expected move down, we said it could reach 349. A bear call consists of selling a short strike, which is 380, and buying a 390. These are calls, and the spread of that is $10. And there's 100 of those, and that you need to have $1,000 to do this trade. But instantly in your bank account, you'll get 590, and you're risking a max of 410. That's a good risk reward ratio. So if it gets to 349, like we say it will, 12% move, we expect to get, and I've moved over here about midway to the trade. This is 90 days, January, expiration. Let's say 310. I know I went up to one level, but I'm being conservative. 310, we expect to get this trade, exiting early. And our stop loss is going to be at 430. 430 is right there. And let's just put what's below that. I'm trying to draw a straight line. And you could take 225, 232, and I chose 243. That's your loss, and that's your win. So you have to ask yourself, is it going down? And would I risk $245 to find out in order to make $349? And most traders will take that risk every day of the week. And you can achieve this somewhere around, hopefully, a month and a half. And if it gets away from you, you can exit at your stop loss at any time. And if your profit got away from you, that's a good thing. And look what you get. Almost $600, the whole credit. I usually don't go for the whole credit unless we have I usually take profit early if it's a big move early. And if it's only a slight move, then I let it go a little bit, because it's worth the risk, the chance to make the money. Summarizing again, a stop loss of 430, somewhere up in here. Plenty of room to run, and a target of 349, somewhere in there. That line is not straight, but that's where it's at, 349. And if it hits there, you're going to get 310. And if it hits there, you're losing 243. And that profit margin there is 21%. I like it. And based on this expected move of 12%, expiring in January, 86 days out, you'll have a risk-reward ratio. For every dollar you spend, you'll get 128 back. And that's decent. So that's the ratio, 128. Which means you only have to win about 40% of the time. Plan for losing. Well, what do you think of this trade? Please like and subscribe the video. Leave a comment below. Do your own due diligence. Check out my free Discord for more trade ideas. Join our Discord. Happy trading. We'll catch you on the flip. Shorting John Deere. Near term.